Hello, I'm Carolyn Herbert for the Finance News Network, and joining me from medical technology distributor Life Healthcare Group to discuss its full year 2015 results is CEO Matt Muscio. Matt, welcome back.
Thanks, Carolyn.
Matt, you've just reported your results for FY 2015. What were the highlights?
We were pleased to have delivered a result that was in line with the outlook we'd provided the market. So with 99.3 million of revenue, that gave us top-line growth of 13.8%. We had EBITDA growth of 14%, and we had growth of both our NPATA and our EPS of 17.3%. This included 1 month of M4, which was the acquisition we did in late May.
And now to operations. Life Healthcare sells product in 3 key areas, being spine, neurosurgery, orthopaedics and cardiology. How have those areas been performing?
Carolyn, we made significant progress in the core channels of our growth strategy. Through our implantables across spine, neuro and orthopaedics, we had 15.5% growth, which included significant share gains. This was driven by a 7% increase in revenue per surgeon and a 7% increase in the number of new surgeons within that space. We attributed the result to the investment we made ahead of growth in high calibre salespeople, as well as several new product introductions, including 3D printed implantables, magnetic growth technology, and we have a funnel of new product introductions, including our minimally invasive spine platform and some new technology in orthopaedic tumour. In our cardiology channel, we had a strong year by strengthening the channel with the acquisition of M4 at the end of the fiscal year. That extended our ultrasound offering into point of care. Beyond that, we made significant penetration into the mid-tier private category with the launch of the Affinity platform with Philips. And then finally, to finish the year with the acquisition of MVA, Medical Vision Australia. That puts us in a position to go beyond cardiology into percutaneous coronary intervention.
Matt, you've just announced the acquisition of Medical Vision Australia. How does this fit into Life Healthcare's strategy?
So the acquisition of Medical Vision Australia sits within our cardiology strategy, leveraging the position that we've built in cardiac ultrasound. In Medical Vision Australia, the core products are diagnostic therapies used within the lab through the supply of Volcano. Volcano is now owned by Philips, so this acquisition also extends the very successful relationship we've had with Philips over a long period of time. What this acquisition does is it gives us scale in the channel, gives us presence in the lab, and what we'll do is it will complement our current portfolio of biosensors stents, but we'll continue to build on that with some more innovative product in that interventional cardiology space.
In the past couple of months, we've seen the Aussie dollar fall. How has the company adapted to the lower exchange rate?
Life Healthcare continues to manage margin holistically. We've got a policy of hedging. Beyond that, when we look at the different levers, we continue to use price increases. We optimise our position on the prosthesis list. Being a company that has a significant capital division, we price our capital based off expectations around spot rate. We also have deep relationships with partners, and we look at trading terms, working with them to ensure that Life Healthcare is in a position to continue investing ahead of growth and delivering for both the partners and the company.
Matt, now to your appointment as CEO, what are you hoping to achieve?
Look, first and foremost, it's to provide a smooth transition from our departing CEO, Darren McKenna. I'll work with the team on delivering the growth strategy, which I built with Darren and the executive leadership team, continuing to deliver growth for the company and for shareholders. Beyond that, it will be identifying where we go to in terms of a 4th and 5th channel within that strategy. And lastly, it's to continue the success of the culture of the company by using the business model to attract innovative technology and build on the market-leading sales force that we've got.
And finally, Matt, can you provide a comment on FY16 guidance?
Carolyn, we think we've built a foundation for solid, predictable growth for the year ahead. So the guidance we're giving the market is for an underlying organic growth rate in the low teens. With the inclusion of the M4 acquisition, that puts us in the mid to high teens, and that doesn't include the Medical Vision Australia acquisition. And the guidance we've given is for similar margin and EBITDA rates as we had from the previous year.
Matt Muscio, thanks very much for the update.
Thanks, Carolyn.